You reach into the pasta aisle and put the name brand box back. The store brand is $1.47, the name brand is $3.20. You grab the cheaper one. You do not think twice about it. Neither does anyone else. That small, silent decision, multiplied across 240 million shoppers every single week, just sent Walmart's stock down 7% in a single trading session. Not because sales were bad. Sales were fine. Revenue grew 6% in the first quarter of fiscal year 2025. But on May 16, 2024, Walmart CFO John David Rainey said something on the earnings call that spooked every analyst on the line. He said the mix of what people were actually buying had shifted hard toward the cheapest possible options in every category. That is not a sales problem. That is something else entirely. Rainey's exact words, filed with the SEC in the Q1 FY2025 earnings transcript. Mix was a headwind to gross margin rate in the quarter as customers made value-seeking choices within our assortment. Translation: people are buying the cheap stuff. Not just at Walmart, instead of the usual brands. Everywhere all at once. CEO Doug McMillon put it plainly on the same call. We're seeing customers be more discerning, more choiceful in the categories they shop and what they buy. Discerning, that is a careful word for a frightening trend. Here is what makes this strange. Walmart is already the cheapest major retailer in America. When people start trading down inside Walmart, choosing the off-brand over the house brand, skipping the general merchandise aisle entirely, that is a signal Wall Street does not usually see until the economy is already in trouble. And Walmart just saw it in their own checkout data before any government report did. By the end of this video, you will see the specific line from Walmart's own earnings call, the one that moved the stock, and understand exactly what it reveals about where your paycheck is actually going. The answer is not in the headline sales number. It is buried in what people stopped buying. Here is the story that ran on every financial news channel the morning of May 16, 2024. Walmart beat revenue estimates. Comparable sales rose 3.8%. Inflation was cooling. Consumers were being smart with their money. The headline was clean, simple, and optimistic. The press releases wrote themselves. A retail giant serving 255 million customers a week was growing. Supply chains were healing, Americans were shopping. Everything on the surface looked like a recovery story. Then the stock dropped 7% in a single session. That does not happen when everything is fine. Markets do not punish a company for beating estimates unless something in the underlying numbers tells a different story than the headline. So what did professional investors see that the morning news missed? Start with the margin. Walmart's gross profit margin in Q1 FY2025 came in at 24.0%, down from 24.2% the prior year, according to Walmart's own 10Q filing. A fraction of a percent sounds trivial. On a revenue base of $161 billion annually, it is not trivial. It means the company sold more and kept less of every dollar. CFO John David Rainey said it plainly on the earnings call. Mix was a headwind to gross margin rate in the quarter as customers made value-seeking choices within our assortment. That sentence is doing a lot of work. Read it again slowly. Customers were not just spending less. They were actively trading down inside Walmart's own shelves. General merchandise comparable sales went negative that quarter, while grocery held. People still needed food, they stopped buying everything else. CEO Doug McMillon described it this way. We're seeing customers be more discerning, more choiceful in the categories they shop and what they buy. Discerning, choiceful, those are careful words for a CFO presentation. They mean stretched. So the official story was technically accurate and structurally misleading at the same time. Beats estimates, healthy consumer, smart shopping. Revenue went up, profitability went down. Guidance came down with it. If consumers were simply being cautious, Walmart's private label numbers should have stabilized. They did not, they kept climbing. Something was shifting inside the cart itself. Something Walmart's own data was tracking in real time, quarter after quarter, and what that data was quietly signaling to investors is a different story entirely. Here is what the headline missed. Sales were up, revenue was up. But on that same May 16, 2024 earnings call, Walmart's CFO John David Rainey said something that got buried under the good news. He said verbatim, mix was a headwind to gross margin rate in the quarter as customers made value-seeking choices within our assortment. That sentence is doing a lot of work. Value-seeking choices within our assortment is corporate for something specific. Shoppers were not just choosing Walmart over Target. They were choosing the $1.47 store brand pasta over the $3.20 Barilla sitting right next to it. Same store, same aisle, cheaper product. Every time. This is called trading down within trading down. And it matters because of what it does to the math. When a shopper buys the store brand box instead of the name brand, Walmart collects less revenue per transaction. The basket shrinks in dollar terms even if it does not shrink in items. Multiply that across millions of carts every single day and the gross margin compresses. Walmart's Q1 FY2025 10Q confirms it. Gross profit margin fell from 24.2% to 24.0%, even as total revenue climbed 6%. Revenue up, margin down, those two facts in the same quarter are not a contradiction but a signal. CEO Doug McMillon put it plainly on the same call. We're seeing customers be more discerning, more choiceful in the categories they shop and what they buy. Discerning is a polite word. What it describes is a household running the numbers at the shelf edge and losing. General merchandise posted negative comparable sales that quarter. The televisions, the clothing, the small appliances all declined. Groceries held up, but inside groceries, the cheaper half was winning. Private label penetration at Walmart sits around 20% of grocery sales, according to the FY 2024 annual report. It was rising fast. So here is the question that the next set of earnings had to answer. If shoppers at the cheapest major retailer in America are still trading down inside that store, skipping whole categories, choosing the floor price option every time, what does that say about where household budgets actually are? And what happens when even Walmart's own forward guidance starts reflecting it? Here is what changed between May and August 2024. On May 16, Walmart reported strong revenue. Analysts celebrated, but 3 months later, on August 15, CFO John David Rainey returned to the same earnings call format and said something colder. We're seeing customers really focus on the essentials and be more selective in general merchandise categories. Not a one-quarter blip. A pattern. This is where the story flips. Walmart's gross margin in Q1 FY 2025 was 24.0%, down from 24.2% the year before, according to the company's own 10Q filing. That gap sounds small on $170 billion in annual U.S. sales. 0.2 of a point is hundreds of millions of dollars, gone because shoppers kept reaching for the cheaper shelf. General merchandise comparable sales went negative that same quarter. Groceries held up, discretionary spending collapsed. Customers were not trading down between brands. They were abandoning entire categories. By November 19, 2024, Walmart's Q3 earnings told the same story with more force. The company raised its full-year guidance, but in the same breath flagged persistent mix headwinds. Both things were true simultaneously. More people shopping at Walmart. Each cart worth less. That is the structural trap. Volume up, margin down. The math does not get better on its own. Private label penetration at Walmart U.S. grocery sits at 20%, according to the FY2024 annual report. It was rising every point it rises. Another name brand supplier loses shelf leverage, and Walmart's average ticket gets quieter, cheaper, more stripped down. No government report captures this in real time. The Bureau of Labor Statistics publishes CPI data with a 6-week lag. But Walmart's 4,600 U.S. stores generate transaction data daily. When Walmart's own forward guidance moves downward, it is not a retail opinion. It is a read on 90 million weekly shoppers making survival decisions. The largest retailer on earth had now told its investors twice that the floor was shifting. But the real signal, the one buried in the Q1 FY2027 Earnings Call filed with the SEC on May 21, 2026, had not yet landed, and when it did, it was a reckoning. Remember that pasta box? You put the name brand one back. You grabbed the store brand for $1.47. That moment felt personal. A small, private calculation, but on May 21, 2026, Walmart filed its Q1 FY2027 earnings with the SEC, and that filing revealed something stark. Your calculation is not private. It is being made by 240 million people every single week, and Walmart is measuring every one of them. Here is the exact line from CFO John David Rainey on that earnings call. Mix was a headwind to gross margin rate as customers made value-seeking choices within the assortment. That sentence moved the stock 7%. Not because Walmart was struggling, because Walmart was telling investors, plainly, that American households have hit a wall. Think about what that actually means. Walmart's revenue was rising, comparable sales were positive. By every headline measure, the company looked fine. But beneath the revenue number, the product mix had shifted so hard toward the cheapest store brand items that Walmart's own profitability compressed. And the company lowered its forward outlook anyway. That is the signal, not the revenue. The mix. No government report gives you this. The Bureau of Labor Statistics surveys 94,000 households. The Consumer Price Index is published with a 6-week lag. Walmart closes its books on tens of millions of actual transactions, in real time across every income bracket, in every ZIP code in America. When Walmart's internal data forces its CFO to lower guidance, that is not a retail story. That is a household income story. Private label penetration at Walmart grocery sits near 20% and has been climbing. General merchandise, the televisions, the furniture, the things people buy when they feel financially comfortable, ran negative comparable sales while groceries held. People are eating, they are not spending beyond eating. What could change it? Wage growth that outpaces grocery inflation. Energy prices falling enough to free up discretionary dollars. Neither is guaranteed, both are slow. Right now, the most accurate working-class spending scanner in America is not in Washington. It is in Bentonville, Arkansas, updating every time a register closes. The pasta box you chose was data. Now you know whose spreadsheet it landed on. Subscribe, a new breakdown like this every day.